you're back in the loop, and it is the second to the last day of the month, and the PSE index is still stuck in that rut. Investors and money managers on standby as they wait for this wave of political uncertainty to let up. Now, this week could be pivotal as both U.S. President Trump and Fed Chair Yellen are scheduled to speak this week. And back home, the peso has opened weaker versus the greenback. Now, what to do while waiting for things to firm up? Let's ask Marvin Germo, registered financial planner and author, who is with us today. So, Marvin, what do people do while they wait?
Okay, yeah, what you said is true that there's a lot of wait and see happening because of Trump's protectionist stance, and you also have the announcement of the Fed raising rates 2 to 3 times this year. So a lot of funds are also moving money from local markets abroad because of the guaranteed rates that they could actually get. So we could see
exactly. Last week we had net foreign outflows, and then last week it was inflow. So who knows what's going to happen again?
But if you look at it from a longer stretch from the start of the year to where we are now, there's been a lot of selling still, and for me, for markets to go up, it has to be a combination of locals and foreigners actually buying up the markets as well. So I think there's a resistance at around 1,370 and around 7,370 and around 7,450, with 7,450 being the strongest resistance. But we won't break that until we see net foreign inflows become relatively more regular and stable.
Okay, you mean nothing that looks like this?
Yes, nothing. and larger green candles. So.
Larger green candles. Okay, so what do you think is the main catalyst for foreign fund inflows to really come back? Are they really waiting for the Fed? I mean, the probability for a March hike on the Bloomberg has now climbed to 40%.
Okay, I think there's a possibility this March, but I think there's a larger one this June. It's still in line with what the Fed said that they would do 2 to 3 rate hikes per year. So if we do one in June, we still do one in December. That's still in
line with
everything. So until we see something change there, I think the sentiment will still be how do you position after the Fed. But here's the thing: as funds start to pull out because of it, it becomes a buying opportunity because nothing really has changed in terms of the value of the stock of our listed companies as well.
Our fundamentals also.
Yes. So for people who are in it for the long term, should the markets drop because of the Fed rate hike, it could be you could find out the stocks which drop the most and look at the value. If it's still there, then come in and buy some more.
Okay, now speaking of that, that's a very good question because I really wanted to ask you about the corporate earnings that we've seen so far. Okay, well, China Bank being the latest, and we're waiting for Meralco to go online, right? But how do you find their earnings so far? Are they in line with your personal expectations?
I really like what happened to the banking sector.
Same here.
BDO releasing earnings that are at its highest right now. You have Union Bank. So across the board, the low interest rate scenario is working because it allows more people to actually borrow and expand their businesses, and it helps people buy their condominiums as well. So with that, unless we see interest rates go higher, I think the banking industry would still continue its upward run in terms of earnings. So I'm happy with it, but it's quite tempered down also by what's happening in consumption. Some of the consumption stocks that I really liked were not as performing.
Okay, let's get to those consumption stocks in a bit. I just want to ask you actually, so you do like the banking sector right now. Now, which sectors would you avoid?
Okay. Easily, mining. The entire industry as a whole. If you've looked at what happened, majority of the mining stocks that were related to nickel minings that were open pit were the ones that were specifically hit. But there are some outliers that were compliant, like Semirara, which is still moving up as of this point, which is good. But if you're looking at it from an industry or a sector perspective, I'd stay away from the mining industry. I'd stay away from probably gaming as well. Things that are not as, I guess, robust to where the government is pumping the money in the next few years.
Okay, so which brings me back to Jollibee. Now, Jollibee has been one of your usual picks every time you come here. You know, other things may change, but Jollibee remains a stalwart. However, it's not been doing too great as of 3Q, right? We expect the fourth Q numbers. Full year numbers are not too bad on the whole. However, take a look at that. We have 7 buy ratings, 4 holds, and 2 sells. This is definitely not the best time for Jollibee. But as you said, it could be a good time to enter because it's cheap right now.
Okay, when it comes to the stock market, it's about buying a good company at a good price. I really think that if you could get it at around 180, 170, it would be relatively cheaper. So Jollibee is a good company, but
not 203 right now.
Yeah, I'm not that I guess not optimistic buying it at 203 because the gains that you would get from it over the midterm may not be as attractive as well.
Okay, well, some other stock, a consumer stock, like I said, we would go back to consumers. I am looking at, these were your stock picks as of today.
Okay.
Okay, so we have Pure Gold, Surpass, EDC, and Semirara. You already said your piece about Semirara. Now, let's take a look at Pure Gold, which is up about 0.1%. Now, it's recently taken Emperador's spot on the main index. Do you think that this stock still has room to move up?
Of course, when they displace Emperador in the index, a lot of funds that are tracking the PSE would have to buy it up to just rebalance its portfolio. But at the end of the day, Pure Gold is a consumption stock that's in line with the growth of the economy as well. I mentioned this because the stock is in a mid to long-term uptrend. In spite of majority of the stocks slowing down or consolidating, it's headed up. And I think if it stays above 46, it can go to 49 over the mid to short term as well. So a good stock both fundamentally and technically right now.
All right. Okay. Now, let's move on to the peso. The peso, of course, not doing too well on this Monday. Lowest in over a decade. Now, for the last year, it's still a little bit up versus the dollar. But with the peso, we all know we're expecting this to weaken further. How should one reposition their portfolios as early as now?
Okay, if they're invested in primarily pesos, of course they would. A lot of companies that do a lot of imports would be generally affected by all of this. But if you're in it again for the long term, even the BSP said it that they're expecting also that this is purely price action, meaning that it's market driven. The fundamentals and the valuations of our economy is still intact, and they have 81 billion in its arsenal to help defend the peso as well. That's a year's worth of imports when you look at it from that perspective.
Their reserve ratio,
and the way I see it as well is when you look at it from a perspective of funds, they're just really pulling out money in preparation for the increase of interest rates in the US. So that's one perspective to look at. But should you be scared? One thing that I would look out for is how big it would hit inflation later on. Because since businesses would actually import stuff, they would need to probably raise prices higher just to mitigate the added cost to it. So
the loss from forex trade,
Yep. So people are pegging it at 3.6 to 4% inflation this year. If it goes higher than that, it's something that I would be concerned about because it generally would affect a lot of the consumption stocks that I like as well.
That's right. You're not the first analyst to tell us that. Thank you very much, as usual, for your insights, Marvin Germo.
Of course.
Moving on to thousands of passengers today that are affected by a transport strike opposing new government regulations on the